Imagine standing in a foreign country where nobody speaks your language. People are talking, information is everywhere, but you understand nothing. That is exactly how most beginners feel when they look at a stock chart for the first time. They see red bars, green bars, lines moving everywhere, and it all looks confusing. But what if I told you that every professional trader in the world is reading a language? A language that tells them what buyers are doing. A language that tells them what sellers are doing. A language that reveals fear, greed, confidence, and uncertainty. That language is called candlestick charts. And today, you are going to learn how to read it. Let's begin. Today, we uncover the secrets of the charts. Every day, millions of people buy and sell stocks. Every second, a battle takes place between buyers and sellers. But how do we see that battle? The answer is candlestick charts. Candlestick charts are one of the most powerful tools ever created for traders. Before candlesticks became popular, investors had much less information about price movement. Today, a single candle can tell you an incredible amount about what happened during a specific period of time. A candle could represent 1 minute, 5 minutes, 1 hour, 1 day, 1 week. The time frame changes, the language remains the same. Let's break down a candle into 4 simple parts. Every candle contains opening price, closing price, highest price, lowest price. That's it. 4 pieces of information. Now imagine a green candle. The price opened lower, the price closed higher. Buyers won that battle. The larger the green candle, the stronger the buying pressure. Now imagine a red candle. The price opened higher, the price closed lower. Sellers won that battle. The larger the red candle, the stronger the selling pressure. The thick middle section is called the body. The thin lines above and below are called wicks. The wick shows us where price traveled before returning, and those wicks often reveal important information. Many beginners focus only on the candle body. Professionals study the wicks. Why? Because wicks reveal rejection. Imagine buyers push a stock higher. Suddenly, sellers arrive. The price falls back down. The candle closes lower. A long upper wick appears. That wick tells us buyers tried to push higher but failed. Now imagine sellers push a stock lower. Buyers suddenly step in. The price recovers. The candle closes much higher. A long lower wick appears. That wick tells us sellers lost control. Every wick tells a story. The market is constantly leaving clues. The question is, are you paying attention? Let's learn 4 patterns every beginner should recognize. Pattern number 1, the hammer. A hammer has a small body and a long lower wick. It often appears after a decline. It shows that sellers pushed prices lower, but buyers fought back aggressively. This can signal strength. Pattern number 2, the shooting star. A shooting star has a small body and a long upper wick. It often appears after an advance. It shows buyers attempted to push higher but failed. This can signal weakness. Pattern number 3, the bullish engulfing candle. This occurs when a large green candle completely covers the previous red candle. It suggests buyers have taken control. Pattern number 4, the bearish engulfing candle. This occurs when a large red candle completely covers the previous green candle. It suggests sellers have taken control. Remember, no pattern is magic. No pattern guarantees profits. Patterns simply help us understand probabilities. Many beginners memorize dozens of candle patterns. Then they believe every hammer means buy, every shooting star means sell. This is dangerous. A candle by itself means very little. Context is everything. A hammer near strong support can be meaningful. A hammer in the middle of nowhere may be meaningless. Professional traders don't trade candles. They trade the story behind the candles. That is a huge difference. Professional traders ask questions. They don't look for magic signals. They ask, who is in control? Are buyers becoming stronger? Are sellers becoming weaker? Is volume increasing? Where is the candle forming? Near support, near resistance, after a trend, before a breakout? The best traders are detectives. They gather evidence, then they make decisions. A single candle is one clue, never the entire case. This may surprise you. Candlestick charts are actually pictures of human emotions. Fear, greed, panic, confidence, hope, regret. Every candle represents decisions made by real people. When you learn to read candlesticks, you are learning to read crowd psychology. And because markets are driven by people, understanding psychology gives you a powerful advantage. Today's challenge is simple. Open any stock chart. Find 3 green candles, 3 red candles, 1 hammer, 1 shooting star. Study their locations. Ask yourself, who was winning the battle? The buyers or the sellers? Train your eyes every day. This skill will become more valuable with practice. Today you learned the language of the market. You learned how to read candlesticks. You learned how to recognize buyer strength and seller weakness. Tomorrow we take another major step forward. We will learn support and resistance, the invisible levels where institutions often make their biggest decisions. Thank you for watching. Subscribe to Wealth Entertainment 21. Turn on notifications so you never miss a lesson. Charts do not predict the future. They reveal the battle happening right now. Learn to read that battle. I'll see you in episode 5.